Hey, what's good? In this video, I'm going to be showing you the hack to finding the right option strike price. We're going to be taking a look at this on the Robinhood platform, but this can be applied to any platform where options are traded. So without further ado, let me get my iPhone and let's hop into handy dandy Robinhood. All right, so here we are in Robinhood taking a look at Amazon. And the first thing that we need to do in order to find the right strike price, we're going to want to have some sort of plan, some sort of prediction, some sort of idea where the stock price might be going to. And if you don't know how to do this, if you don't know what this is called, this is referred to as technical analysis. If you're a complete beginner and know nothing about technical analysis, be sure to check out this playlist right here. That's going to be a great base to kind of get you started and actually take you pretty far, in my opinion, when it comes to learning how to trade. So if you don't understand that, this video is not really going to do much for you, but assuming you do, let's go on with the video. Now, just for the sake of simplicity, I'm just going to look at this. The market is closed as I'm making this, so it doesn't really matter. But let's say, okay, Amazon, this does not qualify as solid analysis. I'm just looking at the chart. But let's say the last high I see on Amazon, there's one over here at 180. Amazon's currently at 178, and then there's another one above that at 182, almost 183. All right, so with Amazon being at 178 or almost 179, and let's say we were thinking Amazon can go back to 183, that's going to be about a $4 move. We want to keep this in mind as we are looking for options contracts, looking at the strike price, because this is where the hack's going to come in. There are things we can look at when we're purchasing these to tell us if it's going to be worth it. So now that we kind of have a plan, and that would be, the plan would be for Amazon to move up. Actually it's at 178 now, so let's say about $4.50, $5. Now that we have a plan on that happen, we can now see, hey, what is going to be worth it? So we're going to come over to trade. We're going to go over the trade options. And then we're going to start by picking an expiration date. Usually the more time we get, the more time we have to be right. But sometimes it can be a little expensive. And what I'm about to show you is actually going to help us figure out, hey, ideally the more time you can get for less, the better, but to each his own. So for the sake of this video, we're going to start off by looking at April 4th, which is actually tomorrow. So probably going to be worthless. All right, so we're looking at April 4th, and I want to make sure we're on the buy side. All right, and taking a look at this, all right, we can see Amazon is trading at 178.97. And remember, we're thinking it can get to 183. So looking at it, if we take a look at this 180 call, we can see it is currently trading at 189 per share, which is 189 for the whole contract. All right, so if we click on this 180 call, we can actually see the numbers, the Greeks. All right, so the price, the price they're asking for is 189, so that's how much it costs. The delta, what you see right there for the delta, that is going to be how much you can expect the contract to increase in value as it goes up by $1. If Amazon is currently at 170, let's say about 179, and it goes up to 180, that means the contract's going to go from about 189 to about 229. All right, just because it moved $1. So let's say it moves $4. It's going to move 160 cents. So focusing on just the delta, because we see that 0.40, that's telling us it's going to move about 0.40 cents for every dollar it moves. We ask the question, okay, $4 times 40, that's 160. That's $1.60 per share. All right, if we pay 180 for the contract and we write it up for that $4 and then sell out, we paid $189 to actually make that $160 or $1.60 per share. But wait, there is actually more, and this is part of what makes options trading so difficult. All right, so we got one part, we got the delta. If we look, not the next one over, but the one over, we have theta. All right, so theta, this is going to be something that eats at your contracts. And when it comes to theta, I would personally say ignore whether it's positive or negative. Theta, unless you're selling to open a contract, is going to hurt you. What this data is telling us, like right now, Amazon is trading at about 179. If Amazon stays at this same price from today till tomorrow, this contract is going to lose $1.33, 34 cents per share. And that is fighting against that 160 cents per share that it went. So if this contract does not move, or just from today to tomorrow, this contract is going to lose about 134 cents just because that happened. So that's something that we need to pay attention to. Now, I call this a hack. This is something that I always look for, especially when I'm holding a contract longer than a day. To me, the theta doesn't matter as much if you're going to buy and sell real quick in the same day, usually within the same hour or two. But if you're holding any options contracts overnight, theta is really going to eat at your contract. So when I'm taking my options trades, I always like to make sure my delta is higher than my theta. Once again, forget about the positive negative, because technically 0.40 is higher than negative 1.34. But if we get rid of that negative sign, the delta is 40, the theta is 1.34. And in my eyes, risking $1.34 per share, or risking probably about 70 to 80% of the contract, like just from one day to the next, is not worth it to me. So I would personally pass on this unless it was a really fast day trade and I thought that we were going to get that $4 move really fast. All right, going on. Next, we're going to take a look at the same strike price, but we're going to look at a week out just to see how it differs. Now going on, looking at that 180 call, let's once again assume we think it can get to 183 and kind of do the math again. So now instead of being on the 4th, we're on the 11th, and I'm going to click on the 180 call and we're going to take a look. So now it costs a good amount more. So instead of 189 is now going for 460. The delta is higher, so each dollar it moves, it's going to move 47 cents instead of 40. And just for the sake of math and simplicity, I'm going to say 50 instead of 40. So if I'm looking for a $4 move on this, that's going to be about a $200 move. Now, the first thing I want to ask myself is, okay, is a $200 move going to be worth it from this standpoint? Let's say I think this is going to take me a day to do it. All right, so it costs $460. I'm looking for a move that can make me additional $200. And I'm looking at the theta, and the theta is only 33, almost 34. Let's say we get that $4 move. It goes up what would be $200, but then a day passes, so it loses about 34 cents. 200 minus 34. In my eyes, this is a trade I like. I want you to notice in this situation, the delta is higher than the theta if you ignore that negative sign. Well, it's higher either way, but it's higher than the theta ignoring that negative sign. And this provides a little bit more comfort for it to actually reach my target price. Whenever I started going in with a plan, I noticed I became more profitable trading options. I don't always feel the need to know what my theta is if I'm making a day trade. But whenever it comes to me actually making a good trade, I usually want to know what my delta is. So I know, hey, if I'm looking for this move, is this trade going to be worth it? Sometimes there is increased volatility on options contracts. Sometimes looking at those same contracts, because there is so much already priced in, that same $4 move would only profit like $16 total. So I always want to know what the delta is, just to know if the option is going to be worth it. If you enjoyed this video and learned anything, be sure to smash the like button. If for some reason you're new here and haven't already, be sure to subscribe and hit the bell notification icon if you haven't already. And last but certainly not least, thank you so much for watching. Matthew Manuel signing off, and I want to change your life.